In this video, you are going to learn how to use one of the easiest price action strategy that you can find. So this strategy might not be new to you. You probably have heard about this strategy before, but most people are using it and they're using it wrong and they are losing money because they don't know the secrets that I'm about to share with you right now. I'll also show you how to dramatically increase your win rate and your probability to win each and every trade by using a simple secret that I'm about to show you in this video. Now, this strategy is called the big shadow candlestick strategy. So most of the people know this as the bullish engulfing or bearish engulfing candle, but this is different. I'm going to show you why we are going to trade this engulfing candle in a different way and why it is called the big shadow candlesticks. So before I show you the strategy, let me tell you about the sponsor of this video, which is Fastable. Fastable is an all-in-one trading platform that allows you to do many things in one website. First thing that you can do on Fastable is they have a free charting software where you can analyze the market and you can get all the instruments that you want and you can open up to 64 tabs for free. Number two, they have the economic calendar. On the economic calendar, you are able to see the upcoming events that can change the market movement so that you can either trade with the news or either you can avoid getting in the market. You can also copy trade from traders who are already making money in the market. So you can connect your account to other people's accounts. You can also chat with other traders using their trading chat room. Make sure you visit Fastable using the links in the description below or in the pinned comment. Now, before I show you how to buy, how to sell, how to set up your stop loss and take profit in the right way, how to increase your win rate in the market, I want to show you the rules to this strategy. So the first rule is that the big shadow is going to be created with two candlesticks, right? So the first candlestick is going to be small and the second candlestick is going to be bigger than the first candlestick. And the second candlestick needs to cover all the body and the wicks of the first candlestick. So let me show you what I mean by this, okay? So if you look into this, at this here, I want you to focus on these two candlesticks right here, right? So if you focus on these two candlesticks, you're going to see that this first one right here is a bearish candlestick pattern, right? So it's a bearish candlestick, right? Because it's going to the downside, right? And you can see it starts from this point right here to this point right here, right? But if you look at the second candle here, you're going to see that it starts right here and it ends right here, right? You can see this second candle is completely covering this first candle right here. So this first candle, step number one, it should be covered completely by the second candlestick, right? So rule number two is the second candle should be bigger than at least 3 or 4, at least 5 of the previous candle. The reason why we are doing this is because we want to get only in the market when the market have already gathered enough momentum to go to our direction, right? So if you look at this candle, right? So our big shadow is this candle right here, right? So this is going to be our big shadow, right? So since this is our big shadow, we are going to count. This is first candle, second candle, third, fourth, and fifth, right? So if you look at these 5 candles right here, you can see these 5 candles. Even if you look at the body of this 6th candle right here and all these candles up to this, you are going to see that all these are very smaller to this candle, right? So all these candles are smaller to this candle, right? Which means the market was moving up and down. There's big wicks here, there's dodges, and there's big wicks to the upside. The market was gathering momentum right here, and then all of a sudden, right, it prints a candle that covers not only this candle, but it's bigger than all these candles. And then this is the candle that we are looking at. Now, before we go into the market, don't place a trade yet. We need another rules. We want this strategy to be as efficient as possible, okay? So the third rule is that the close of this candle, which is this, right? So this is the open and this is the close. So the close of this candle should be at least very close to the highest point of this candle. So we don't want a candle which looks like this. If you look at this, you can see the open, the close here, and the high here. So the close and the high, there's a big gap right here, which means when this candle closes, the market was already losing its momentum to go to the upside. In this case, it just went to the upside because the market always does what it wants to do. But we want to increase our chances of winning here. So the close of this candle should be very close to the high of the candle, right? So that's rule number 3. So we said rule number 1, there should be 2 candles. The second candle is bigger and it completely covers the whole part of the first candle. Then the second candle should be bigger than at least 5 of the previous candles that you get, right? And then the close of that candle should be very close to the upside of that candle, right? So if that happens, right, if this happens, you have a big shadow set up. Another rule, right? So this is just to increase your win rate. Before I show you how to place your trades, right? There shouldn't be any price action that can delay the market to push to the upside. So you just want to draw a rectangle, right? So if I take the rectangle too, and if I draw a rectangle around where this formation is happening, right? There shouldn't be any price action right here that can avoid the market to push to the upside. So if we had the market that had come maybe to this point, reversed the come here, reversed the come here, reversed, and then now we have this candle with all the price action here, we were not going to place this trade, right? So make sure you follow these rules, because this is the only way that you can increase your chances of winning with this strategy. It's a very highly profitable strategy, but most people just go into the market and look for bullish or bearish engulfing candles, but they are not giving rules to this, and they are not increasing their win rate. So we can see here, it's clear that to the left there is no much price action. Now we come to the part of entering this trade. This is very important. If you are using this strategy, do not place your trades as soon as the market closes. So because we are looking at this candle, we want to place the trade at the close of this candle, but we don't want to place as soon as this market closes. We want to place a buy stop. So in this case, it's a bullish shadow, right? So the market is moving to the upside because these white candles are representing bullish momentum if the market is going up, right? So don't be confused there, right? So what we want is, we don't want to place the trade directly after the close. We want to wait. We want to place a buy stop so that the market can trigger itself even if we are not there, right? So we want to just go maybe 2 pips or 3 pips above this this candle right here. If you're using a higher time frame, you can go all the way to 4 or 5 pips. Why am I saying this? Well, what happens sometimes is that the market is going to maybe close right here, right, and create another candle right here, right? So if this candle which is coming next, if it is a bearish candle, right, we can avoid losing this trade by just placing a buy stop above here, right? So if the market was going to create a bearish candle and start moving to the downside, we probably are going to avoid that by just placing a buy stop above the highest part of this candle, right? And why is this important? This is important because when the market finally triggers into your trade, it's probably likely already in momentum to go to the upside. So your trade was going to come at this point right here, and then your stop loss was going to go below this candle, and then your take profit, you are going to look to the left and see where is the nearest zone that is going to likely disturb my market from moving. In this case, we have all the way up to this point right here, but you probably are not going to place a trade like this, right? So you're probably going to do 2-to-1, 3-to-1 risk to reward ratio like this. So this trade was going to be a winning trade, but I don't know if you were going to place this trade, if you had already known this strategy. Let me know in the comments if you were going to place this trade, if you had already known this strategy. Okay, let me show you one more example right here. So if you look at this market right here, you are going to see that if you pay attention to these candles right here, right? If you pay attention to these candles right here, what do you see? You can see that this candle, with no doubt, is completely covering this candle. So this is the second candle, candle number 2, and this is the first candle, right? The second candle is completely covering the first candle right here, right? So you can see the second candle is completely covering the first candle right here, right? And number 2, and the rule number 2, if you look at this past candle, 1, 2, 3, 4, 5, maybe to the up to 10 candles right here, all these candles are very small, right? They are very small, and this one is a huge candle. It's covering everything to its left, right? And it's after this, right? After this, you can see that the market also closes nearer to the high, and then you are going to place your trade above right here. Now, here is the importance of the buy stop that I was talking about. If you look at this right here, if you had placed your trade right here, right? If you had placed your trade right on the close of this, right? So let's do this. If you had placed your buy trade right here, right, look how much the market moved against you before it finally went to the upside, right? Look how much it moved against you before. But if you had placed a buy stop right here, your trade was going to be only triggered with this candle, which had already have momentum, and then from there we see the market pushing to the upside like this. You can see right here, after the market have already been triggered with a candle with momentum, right? So it's very important. It's something that most people don't know about, but placing buy stops and sell stops can increase your win rate, because you can avoid much of the losing trades that you probably were going to okay in the market, right? So, and here another example of that, right? So if you look at this, we have another setup here, right? So we have another setup for the big shadow strategy. You can see this candle right here is completely covering this candle. So candle 2 is completely covering this first candle. And if you look at the size of these candles, all these candles right here, they are smaller than this candle right there. Forgive my drawing, but they are smaller than this candle right here. So in this case, this candle was showing you much potential of the market going to the downside, unless the fact that the close here, the low and the close, there's a big gap here, which we don't like. We don't like this rejection before placing our trades. But if we're going to place a trade right here, right? If you place a trade on this point right here, you can see this market just moved lower here, and that goes up, which means you were going to lose this trade, right? But if you had placed a sell stop, right? If you had placed the sell stop below this candle, there's chances that your trade was not going to be triggered, and you were going to avoid this loss right here, right? Just because your trade wasn't triggered, because there's no momentum right here. Probably it was going to be triggered, but chances are it wasn't going to be triggered, depending on your broker's spreads. And if you want a broker which has very low spreads, almost up to 0 pips, make sure you check out the link in the description below. Here's the last example of the big shadow candlestick strategy. So first thing, if you pay attention here, you can see we have this huge bullish candle here and this small bearish candle. The second candle is completely covering the first candle. And if you look at the size of the candles right here, you can see all these candles are smaller than this bullish candle, right? And when this happens, you are going to place your sell stop. You are going to place your buy stop above this candle right here. You can also see that the close, one of the most important part of this strategy is that the close of the candle have to be almost on the top, so that it shows that this candle closed with momentum. So if buyers had momentum, they can continue in the next hour with that same momentum that they closed with, right? So in this case, you would place your buy stop right here, and you place your take profit on the zone that is probably going to cause the market to reverse. In this case, your trade was going to look something like this, right? And it was going to go ahead and win. You're probably going to get more pips here, but it's not realistic to say you should have got then these pips, because you probably have got exited on this zone right here. So this is called the big shadow candlestick. If you like it, make sure you subscribe to the channel so that you can learn more about this. If you want to get signals from this strategy, make sure to join our free Telegram channel, the link in the description.